Hello and welcome to Martin Lucas Investor. My name is Sensei, and you're watching the Morning Forecast Show alongside our Morning Forecast newsletter, which should have hit your inboxes by now. If you haven't got the newsletter, first link in the description, the news of the day every single day, 2 hours before the opening bell. Thank you everyone for tuning in. Please do hit that like button. Please do subscribe on your way in. Today we're talking about silver. We've also got a big move in the cannabis sector as well, which we'll have a look at. If you have tuned into our morning show, I do really appreciate that you're spending your time with us. Let's go over to live chat. Let's first see who is with us today, and then we'll go over to our silver story. I know a lot of people are very interested in silver at the moment. We've been interested in silver for the longest time. I think actually when I first came on to this channel, not as a host, but as a guest. And when I was talking to Martyn behind the scenes, one of my first main streams with Martyn, where I was as a guest, was about gold and silver. I produced a report, which is kind of funny because now all I do is produce reports and newsletters. Back then, it wasn't what I did, but I decided to do one for the community. An in-depth report, you could call it a deep dive in today's world, with our newsletters, and I presented my findings, my facts about gold and silver. And back then it was 2023. So if I look at the chart, silver was, I remember, it's under 25. I remember. Let me have a look. Yeah, in 2023, yeah, $20 an ounce silver was, and not only was the silver $20 an ounce, gold was actually between 1,500 and $2,000 an ounce, building that big cup and handle. So that was about 3-4 years ago now. Actually no, 2023, 2022, maybe it was 2022. Either way, it was about 3 years ago. 3 years ago, we did that report, maybe just over 3 years ago, now that I think about it. But anyway, it was I remember silver was trading just below $25 an ounce. Gold was certainly under $2,000 an ounce, and here we are. Both have over doubled since then, and we were spot on with our predictions. So it was interesting. I wanted to share that with you. One of my first ever reports, even before the newsletter, was gold and silver, and where I think it was going, which was very much super bullish. And here we are today, a couple of years later, a few years later, where we are enjoying the rewards. I know a lot of people on this chat are also have been buying gold and silver for a while now, and are also enjoying the rewards. I'm gonna tell you how much further I think it's gonna go. I'm gonna tell you if I'm gonna be taking profits. We're gonna get into all of that in a second. If you have just tuned in, please do hit the like button. Silver is now past $64 an ounce. It feels like it was only yesterday where we were talking about that major breakout at $30 and $34, and it wasn't too long ago. It was this year. So here we go. Let me see some of these comments. Unfortunately, I can't see the top one. Joey says, a while ago, this probably was going to be the biggest opportunity of the year, missed by so many. We tried our best. We talked about it many times. If you saw that trailer before the show, if you don't know what that is, that's a new feature by YouTube where we can put a short video as a trailer to a live stream. That I specifically chose that silver video we did back in June. When silver was at $30 an ounce, and you can see our analysis on it. Anybody that bought silver at the beginning of this year is beating the market average. Oh, for sure. Yeah, silver is up 122% year to date. You're beating everybody. Not many people you're not beating. David Knight says, silver miners. I'm glad. Silver miners you're looking at. I'm glad you guys are covering silver. People who don't understand the fundamentals behind it don't understand why it's outperforming gold this year. It could be a missed opportunity. I like to have both. But yeah, silver, as I've always said, is going to be more volatile towards the upside if gold goes up, which it has. Time for silver to shine. Henrix is here. Henrik, thank you for being a member for over 2 years. Jamie Reese says, yeah, I realized after I typed there was no caption on it. Wardog says silver, yes. Stephen Price says, yes, more silver news would be great. Well, you've got it today. We're going to be doing a full silver analysis. Eli B is sorry. Eli B is here. Oh my god, I keep getting this wrong. Eli B is here. Hello. As said, I am in silver thanks to you. Well, we did the research. So you pressed the buy. It's not thanks to us. We just did some research. You did your own research. You're ultimately responsible for your decision, whether that's to the upside or to the downside. So congratulations to you, Eli B. Yestin Winners here. I know Yestin likes his commodities as well. Hello, Mr. Silver. Lovely to have you in the show, Yestin. We should get you calling in, Yestin. Where have you been recently? I know you've been popping into the chat, but you haven't called in. Michael is here. Eli B says, been on margin in silver since September. Thanks to this channel, I do this. Congratulations, but it's on you. Remember, margin is risky. Dan says, good morning, everyone. Yolanda says, good afternoon, Sensei. Good morning to all. Yolanda says, please hit the like button. Yes, if you have just tuned in, please do hit that like button. Rhino Skin says, hi, everybody. Hi, Sensei, says Brian. Zach8 says, happy Friday to all. It's the most wonderful time of the year. Yes, it is, Zach8. Thank you for tuning in. Brian is here. I've been buying heavily into silver for the last few months, bars, coins, and spot. Congratulations to you. Yolanda says, hello, Zach. Daddy Pascal says, good afternoon. Rob Brennan is here. And Rob Brennan broke the chat. Where's it gone? Oh, there it is. Rob Brennan says, morning, Sensei. For crypto, I was thinking about doing 80% Bitcoin, 15% Ethereum, 4% XRP, 1% Casper. Any glaring obvious mistakes with this sort of allocation? With the allocation, any glaring, I mean, it wouldn't be my allocation, but it's probably safer than my sort of allocation. So any glaring mistakes? Look, there's no right or wrong. It depends on your risk profile. It depends what you believe in. It depends what potential of your portfolio you're putting into crypto. It depends. Are you going to be rebalancing? It depends. Are you going to end up researching crypto more and then get the itch and start buying more cryptos? It depends. Do you believe in the philosophy of Bitcoin, or do you believe in the philosophy of technology? And if it's more technology focused, then I'll be reducing my Bitcoin exposure. If it's just past performance and the main thing, what Bitcoin is trying to be is digital gold, and the fact that everyone will choose Bitcoin because it was the first cryptocurrency. If that's the logic, then yeah, makes sense. At the end of the day, if I just had to pretend the perfect person existed out there with the perfect situation, could take quite a high risk investor, I would say to them, you just want exposure in about the 4 main cryptocurrencies. How would I allocate? Well, maybe I'll just split it between the 4, or slightly more allocation to Bitcoin, and then the rest I would split between maybe I'd put 50% into Bitcoin and the rest I would put into Ethereum, XRP, Solana, and then choose a couple of your favorite coins. But do be prepared for 80% drawdown. So if we are in a bear market, be prepared that in 4 months' time, you might be able to put in less money and have the same amount of coins. So I wouldn't be going all in either, especially with crypto. If you've got a DCA strategy, then it's slightly different. But yeah, there's nothing glaringly there's not something I look at and go, wow, that's a big mistake. So Rob Brennan, answered your question. No, it doesn't. There's nothing glaringly obvious that's bad about that. I should have muted myself. Excuse me, I am slightly unwell today. I'm not sure why. Paul D says, good morning, Sensei. Hope everyone is well. Lovely to have you here, Paul D. Sorry I didn't see your Substack message, Paul D. I have responded to you now. Paul D does message me on Substack. I love it. You guys can, if you are on the newsletter platform, you can message me one-on-one. That's weird. I have to verify my age. Good morning, Sensei. All these new laws in the UK, you have to verify your age for everything now. I don't know why it's asking me to verify my age for my own newsletter. Zach says, hi, Yolanda. Have a lovely day. Mahir says, hello, Sensei. Hello, everyone. Thank you, David Hensley, for all the links. Zach says, David, what's up? Peter says, 7% newers, 1% pranksters. Don't know what you mean by that. The Patrick Black says, I bought 48 ounces at $19 or below average for COVID. Wow, look at that. Before COVID. Congratulations to you. I think most of my purchases of physical silver coin-wise, which in the UK I buy Britannias because they're CGT exempt, so we buy coins, and because they're considered legal tender, there's no capital gains tax on them in the UK for legal tender, so stuff from the Royal Mint that are coins, not bars, like the Britannia. Um, and I think my average price would have been around £20, not dollars. So you got better than me. Zach Zate says, I'm starting my yearly month break today on my way to the airport. Where are you off to, Zach Zate? I still regret paying 55. I paid 33 under Obama. Zach Zate is off. Safe travels to Zach Zate. Will you still recommend buying silver now? We will come on to silver. I don't do recommendations. It's not a financial advice channel. I also like you guys saying Ellie, not Eli. Yeah, I struggle every single time. I never know what to say for some reason. Where were we? Where were we? I'm gonna get through these comments and then we're gonna come over to our analysis. Actually, if I can bring that. Oh no, didn't mean to do that. Is it my best? It is my best return this year. Now looking to see how to ladder out. It was your best return this year. Wow, congratulations. Congratulations. Best. I mean, yeah, it's up 122%. Wow. Did I expect it to be up 122% this year? I don't know. I definitely expected it to be above $50. $64? Not sure about that. But I'm not selling for now. I'll tell you when I'm selling. Safe travel, Zach. I used to make. I used. I just let me just make this a bit bigger because it's small right now. Actually, that's too small. I used to make. I just used it to make stuff now. I can make 1-inch rods. You're using your silver to make 1-inch rods. Eli B says, I also like you guys saying Ellie, not Eli. John is saying I started buying silver in February of this year. That's the beginning of this year. You're probably up 100% on your silver. It sounds good, Eli B. Mike says, I'm shining like silver while my hair is. Lovely to have you here, Mike. I know you've got those coins. Peter says 1-inch wire is a 2-inch chain. Daddy Pascal says silver market cap is bigger than Bitcoin's market cap. Is it? No, is it? Assets by market. Really? Oh my god, it is. You know, Ethereum used to be a larger market cap than silver. Last cycle. Ethereum was a higher market cap than silver. Bitcoin was way beyond. Look at this. Let me show you this. Gold is number 1, Nvidia number 2, Apple number 3, Google number 4, silver number 5, then Microsoft, Amazon, Broadcom, then Bitcoin. Bitcoin has actually been quite a bad performer over the last year. Gold has outperformed it, silver's outperformed it, XRP's outperformed it. Yeah, Bitcoin has not been the best performer, and that's considering that you've had ETFs, you had governments endorsing it, considering MicroStrategy was borrowing money and issuing shares like crazy to buy Bitcoin. So slightly concerning. Silver market cap is bigger than Bitcoin's market cap. Thanks for bringing that to my attention. I mean, wow, I haven't looked at that since last cycle, and silver was below Ethereum's market cap at that point. Turn an ounce of silver into $175 by selling anodes. Look at that. Zach Zate says, Happy Friday. Peter says, used it to grow more silver. Congratulations to you. Ricardo says, bless you. Thank you. Hi, Zach. Hi, Sensei. Hi, Mike. Banana Head says, Ricardo. Jerry says, where silver in 2026? I'm not blind to the fact that we've gone up aggressively and silver can have dramatic downturns, but I am more thinking towards the fact if we're going to have a downturn, I reckon $50 or slightly below, and sort of a wick below. But $50 I expect to be a base, and 2026 we could see $100 an ounce for silver. The newsletter is great. Oh, we do. It's not even a member of the channel. Marsha Taylor. The newsletter is great. Thank you. Look at that. Really do appreciate it. We're going to come on to newsletter actually, because firstly, we looked at this in the newsletter when the newsletter first launched, and silver was about $35 an ounce. So there we are. Now we're doing an update in the newsletter, deep dive, as well. So go check out the newsletter and you'll get the silver content. Rob Brennan says, thank you for the comprehensive response, Sensei. The split would be good for DCA into crypto rather than a lump sum. The split would be for DCA into crypto rather than a lump sum. Yeah, I like it. Just me personally, I would lower a bit. I mean, it depends what your risk tolerance is, but if it's only a small percentage of your portfolio, and you don't, and that's the part that you don't mind being risky and volatile. If you are DCAing, then I would reduce my Bitcoin slightly and increase something like XRP a bit more, or add Solana into the mix. So just so you have a little bit more of a basket there. But that's your choice. I'm not giving financial advice. That's just what I would do. Mike says, hi, David. Zach Zate says, bless you, Sensei. Sneezing once, maybe 6. Sneezing twice, then you are right. Oh, I only sneezed once. Peter says, so much fake silver out there. Check your stuff. We're seeing people's pant bars turn it rust like a penny. Oh my god, yeah, please be careful. I've been telling, there's two issues. One is you can just go and buy it on an ISA or a Roth IRA. People will say you're not owning your own silver. That's a problem. I say it's pretty much the same, and you're probably going to get a better price. You're not going to get scammed, and it's more tax efficient for most people. But if you do want to buy physical silver, and I love physical silver, touching it, feeling it, knowing it's yours, all of that sort of stuff, potential tax efficiencies here in the UK with the legal tender. If you're buying that, please be careful because, for example, in the UK, there's VAT if you buy from an official dealer, but if you buy it from peer-to-peer, it's less. But that comes with a risk. Are they selling you fake silver? So there's always a risk with buying physical silver. So please be careful. If you're not educated in the space, do research, watch videos. But if you are not sort of an expert in buying physical silver, go to a reputable store or just go and buy it on your portfolio with an ETF. I feel like Tiny Tim when it comes to Sensei's newsletter. Can I please have some more, good sir? Thank you, David Hensley. Really appreciate it. Zach says Dallas, Texas, and next week Israel for a week. Good luck to you, Zach. Hope you enjoy your trip. Anthony says I saw a troll selling fake silver under London Bridge. Under London Bridge, a troll selling fake silver under London Bridge. I saw a troll under London Bridge. Right, I don't. Strange. Rob Brennan says, I am thinking about a split like 80% crypto, 20% cash, as I'm in my 20s, starting to DCA and have a strong conviction will outperform equities over the next 5 to 8 years. Am I crazy? So I'm starting to think about a split 80% crypto, 20% cash. Wait, no stocks? Or is this just your crypto portfolio? Wait. Rob Brennan, no stocks? What's going on? Or can you just clarify if this is your crypto side of your portfolio? What percentage of your entire portfolio is this crypto side? Or is your portfolio going to be 80% crypto, 20% cash as a whole? Marcus says, would you recommend buying silver now? I don't give recommendations. I think silver could shock us all. Yep, I think it can. It's crazy. Some dealers out there are have been at around $50. They thought silver would come down. It's crazy because these dealers, I can understand why. They're very knowledgeable people, but they're just there to buy and sell and make money. They've been in an environment where silver's been going down and sideways for a very long time. They see the spike and they go, oh, we need to take profit. So what some dealers have been doing at $30, $40, $50 an ounce, what they've been doing is they've been selling at these fairs their silver under spot value because they just want to take profits and get their money out and wait for a dip. That was at $30. That was at $40. That was at $50. We're now at $60. People, including dealers, are selling too early. And when they're selling and it gets absorbed, they're going to be left behind and they're going to have to buy back higher because they're dealers. They need to buy and sell silver. So they're making that mistake. When I was buying my gold and silver in 2022, 2023, coming out of COVID slightly, I was going into these Hatton Garden. It's a strip in London. It's like the Diamond District in New York. I was going to buy gold, going to buy silver. They were practically laughing at me. They were like, "Oh, you're buying at high. It's the highest gold has ever been. This is silver. It's not going to go much higher." They were laughing at me, but I was like, "Okay, I don't care. I've done my research. I'm going to buy." They were happy to sell it to me at no premium, and I've got it at a better offer. And now look at them. And now look at where gold and silver is. Doubled, over doubled my money on both gold and silver. So just because they're in the industry and they breathe it every single day, that doesn't mean they're right. Uh, and it shocked them, and it'll shock everyone. John has said DCA in when I could over the year. No way I'm selling at the moment. Silver could be number 2. Silver could be number 2 on the assets. What would that make it? Yeah, it could. Yeah, gold, silver, number 1 and 2 certainly could do. XRP coming to Solana. Yes, I saw that. That's going to be an XRP weekly newsletter. Peter says, can't rely. I mean, it's nothing massive, but it's cool. Can't rely on electronics to pump gold or silver. They use less and less. Yeah, Daddy Pascal, that was yesterday's news. It's not like, yes, these headlines are cool and we'll look behind the story, but it's not market moving. It's not like massive news. Doesn't really mean much. I'm no fan of paper silver or paper crypto. Rob Brennan says that would be a total portfolio. Just wondering if it's crazy to have no stocks. I expect crypto to outperform equities. That's why I'll do it. Why would I dilute my portfolio with lower performing assets? Because crypto is very, very risky. We've got a special guest on the show.
Adalib123 donated €5 through a super chat. Sensei, can you please take a short look at ASME? Greater than last letter is an I, not an L. What are your thoughts?
If we ever get chance, we will. I'm so sorry. It's just a really busy show. I will have it. Yeah, a short look. We'll have a short look. Yes, we definitely will. I'm just thinking about Rob Brennan's comment here. Is it crazy to have no stocks? I think it is, personally. Why? Well, because you're just owning something that makes no money, and that's crypto. And crypto can be very volatile, so it can be down 80%, 90%, and your money you would just see going down. I would very much not recommend just being all in crypto. It's the highest risk asset class out there. Even though I expect it to outperform equities, I mean, equities are still brilliant performers. I mean, commodities, they're up 100% on a year. The Mag 7 up more than 100% on a year. The S&P 500 up 30%. These are all great gains with a lot less risk. I would always recommend a nice diversified portfolio. So when you asked earlier, is there anything that jumps out at me as, oh, that's a bit sketchy? It would be going all in crypto would be the one thing that jumps out at me. But again, your money, do what you like. I understand what you mean. I expect it to outperform as well, but it's just that level of risk and that level of volatility can be very draining, and also no guarantees. I'm no fan of paper. Looking at selling my physical silver soon, says Yestin. I'm actually also going to start looking at selling my physical silver soon. I'll tell you when. If people aren't buying, price could just go up. Yes, and it's here. Sensor, can you take a short look at ASML? Last letter is an L. Oh, love it. What are your thoughts? I'm just happy to be here, says Northampton West. Lovely to have you here. Rob Brennan says, but if I DCA into these drawdowns just gives me cheaper prices to accumulate more Bitcoin. But yes, maybe it's more sensible for yeah, yeah, 40%. Yeah, if you DC enter drawdowns, but if you're gonna go in with a lump sum to begin with, it might not really mean anything. Um, and then buying each drawdown is pretty hard. You have to have limit orders set up, and you need to know where to buy. And anyway, you can do what you like. It's just very. I would never advise anyone to just be all in crypto. Rob Brennan says yes, but maybe you're in your 20s. You don't need to take massive risks. You just need to get steady returns over time. Maybe it's more sensible 40% crypto, 40% stocks, 20% cash. Yeah, it is. And make sure that cash is earning you some reward, whether it's in bonds or uninvested cash on trading 212. I think you're here in the UK, so that would be, what is that, 4%? You're just going to get 4.25%. Selling, if it gets to 40 to 1, you're talking about the ratio. How are you doing, sir? Eli B says ASML isn't the same as ASML. Oh, it's an I, not an L. Okay. Oh God. Yeah. Thank you. Thank you. Thank you. Thank you. Thank you for clarifying. I would have got it wrong. I can't read. I apologize. Oh, what have I done there? Pressed the wrong button. ASMI. ASMI. We're going to have a quick look at this and then we're going to come on to our silver story. Market cap is 304 billion. What the hell is this? Why does it perform so badly? Market cap's 304 billion. Surely not. What the hell is this? I'm saying that because the stock chart looks awful. ASMI. That's it. PT. What? I don't understand what this is. How is the stock down so much? How is the stock down 96%, but the market cap is 304 billion? You suggesting this was the most valuable company in the world by a factor of 10? I don't think so. I don't get this. Let me see. Financials. General Insurance. I think they've just got the market cap wrong. ASMI. Let me just go to here. ASMI. No, the market cap's 26 billion. Trading view of just trading, and the chart's completely different. The ticker symbol AS. No, sorry, I'm just really confused about this. It's an IDR currency, not USD. Oh, okay. What's IDR then? IDR into USD. Indonesian rupiah. Right. Okay, that makes a lot more sense. And I'm worried that this is going to be a very small number. 304 billion Indonesian in USD. Let me just see what this converts to because this was very concerning. $18 million market cap it seems to be converting to. Okay, that makes a lot more sense. Makes a lot more sense than $304 billion market cap. Okay, cool. Yeah, it doesn't look good. And the market cap's too small. Doesn't look good. Market cap's too small. It's a foreign company. I don't know much about it. The chart analysis will say it's going to zero. Yes, there can be cool, good bounces along the way. I mean, you bounced 88% in a couple days then, and then you went down 99%. So you'll get these bounces, but it doesn't look like the stock's recovering anytime soon. You have to look at the fundamentals. The technicals are just telling me this is going to zero, in all honesty. But that's my thoughts. I just want to take that quick look for you. Was very put off by that market cap and the way that stock looked, so we had to double check that. ASM, it's a group around Netherlands. ASML. I think that's not the right stock. That's not what I mean, Sensei. It's a group around Netherlands. So it is ASML. You told me you specifically super chatted telling me it's not ASML, even though I've know about the company ASML. We've looked at ASML before. Uh, we know it all about ASML, and that is $221 billion company. But you told me it's not. Let me double check this. What's going on? You literally said a super chat saying, "Sensei, can you please look at ASML or I don't know." And then he said the last letter is an I, not an L, even though I said ASML. And then he said ASML is I is not the same as ASML. Be careful. I literally followed your instructions. What are you on about? No, not okay. We need to move on. I apologize. I don't know what you want me to have a look at this point. That's not what I mean. It's a group around Netherlands. But you just said it's a group around Netherlands, ASML. ASM. Maybe the ASM's, yeah, there's an ASM as well. Silver and Gold Mines Limited, is that the one you're talking about? Listening to Sensei's voice is like listening to smooth jazz. Is it? Like, I feel like I'm really jittery. Okay, anyway, we're gonna have to move on to silver. We don't have much time. Okay, so let me film this video now. If I do this, bear with me 1 second. Preferences. Breaking news on Martyn Lucas Investor. We're looking at silver. At the beginning of this year, we looked at silver around $30, and we were very bullish on it. At $35, we saw the major breakout, and then we started looking at our targets. We're now approaching some of those targets, but we also think $100 could be next, and a short squeeze could be on the way. So what we're going to do is do a full analysis into silver. We're going to be looking at it as it passes $64 today. We're going to look at the chart. We're going to go to our newsletter, first link in the description. This is where we presented you that information close to the beginning of this year. We're up on silver about 120%. And let's go over to our newsletter. You get this newsletter every single day, by the way. Full analysis of the day's news. About 7 hours of research put into a 5 to 10 minute read. If you read this every day, you're going to be a more informed investor. So do go and check out the newsletter. Today, we have focused on silver as the deep dive section of the newsletter. So let's scroll down to, wait, actually, let's read the one big thing first. This is one of the section of the newsletter. Today's is also about silver. So what we've said here is silver's dual engine breakout. Silver prices breached $64 per ounce for the first time, marking a 125% annual surge fueled by demand for inflation hedging and AI hardware components. There's more to that story as well. We'll come on to it, banks and short squeezes. But yeah, this rally is compounded by acute supply tightness. As anticipated, 2026 tariffs triggered an import rush that drained Shanghai inventories to decade lows. While retail investors are aggressively buying ETFs due to scarcity of large cap miners, professional sentiment has turned cautious. CFTC data reveals that bullish speculative bets have actually retreated to a 19-month nadir. This divergence signals heightened volatility risks for a market that suffers from significantly lower liquidity than gold. So there are certain risks popping up now, but I'll give you my thoughts and opinions only. Let's go down to, we've got the market snapshot, you've got the top movers, you've got the 5 things you need to know. That's the SEC, that's the Broadcom earnings, that's Trump and the marijuana stocks, that's copper, There's a big story on copper in the newsletter as well. So if you like copper, go and check that one out. But let's go over to our deep dive: the Great Divergence, institutional capitalization, and the physical silver squeeze. The Silver Squeeze Chronicles. The silver market has entered a phase of historic dislocation. On December the 9th, 2025, silver shattered the $60 barrier. Now we're hitting an all-time high of $60.57 by December the 12th. We hit that just before I started creating this video today. Let's have a quick look at silver's price now. 64.36. So yes, the all-time high is now $64.57. This is recorded on the 12th of December. This 123% year-to-date rally is not merely a speculative frenzy. It represents the culmination of 5 consecutive years of structural supply deficits and a violent repricing of physical risk. The dominant narrative has shifted from retail speculation to institutional capital capitulation. JP Morgan, historically a massive net short in paper markets, has aggressively pivoted to become the world's largest physical holder, with COMAX, which is the exchange, part of the CME group, inventories plummeting and lease rates spiking. The market is pricing in a severe shortage of deliverable metal. Sophisticated capital is no longer hedging against price drops, they're securing physical assets at any cost. There is a run on silver. Silver supplies are low. Let's go into the key drivers and analysis. Number 1 is the physical liquidity crisis. Excuse me, I'm a bit unwell today. But I'm loving silver prices. The primary driver of current price action is a seizure in physical lending markets. In October of 2025, the London metals market, remember the London metals market is the biggest in the world, experienced a liquidity crisis where silver lease rates annualized at 39%. Normally, these rates are around 1%. When lease rates explode, it signals that entities with short positions are desperate to borrow metal to meet delivery obligations. This desperation forced physical dislocation. Traders book air freight, so they're actually sending silver bars from New York to London. While 54 million ounces eventually moved to ease the London squeeze, it merely shifted the deficit. The stress has now transferred to the COMEX in New York, where registered inventories have collapsed. We're going from one side of the world to the other. There's not enough silver to go around. The JP Morgan pivot. Remember, JP Morgan always used to short silver. They're now changing their tune. So perhaps the most significant signal for institutional investors is the positioning of JP Morgan. Between June and October of 2025, the bank executed a total strategic reversal. JP Morgan closed its entire 200 million ounce paper short position. They simultaneously accumulated physical metal, now holding 750 million ounces. They're a massive holder of silver, and they closed all their short positions and immediately bought. This is a market-defining signal. The institution often credited with capping silver prices via paper market has effectively capitalized on the short side to go long by holding nearly a year's worth of global mine production in physical vaults. They've insulated themselves from the very volatility that's destroying unhedged short sellers. Oh, we've got a super chat coming in. Special guest on the show.
At Robert Rose 8726 donated £1.99 through a super chat. FOMC cheat sheet in newsletter helped a lot. Thanks.
Look at that. Thank you so much. Super chatting to say how great the newsletter was. I really do appreciate it. So yeah, we did. So let me tell you about the newsletter very, very quickly. I think it's the perfect time. Thank you for super chatting. Let me just bring this on the screen. So we have our very own newsletter. There's a free tier, there's a premium tier, and then there's the other newsletters that you can get from other places. We provide to you all the market headlines, the top stock movers. Today I've the interesting on the top movers is the cannabis sector, and you can see which ones are moving. We've got a completely ad-free experience. We don't take corporate sponsorship. We don't take sponsorship on the newsletter, on the channel. Why? Well, because we don't want anyone to buy up our voice. I want to be independent. I don't like media sources because they have too many ads, just pop-up ads, but also the people that sponsor them basically don't let them speak freely. So you get that ad-free experience. You get my insights, every single story. I give you my thoughts. You get the chart of the day. And what that super chat was just talking about was the event cheat sheet. So FOMC was a couple of days ago, and we put together a morning newsletter, the normal daily newsletter. Remember, you get this newsletter every single day to your inbox. Top stories, 5 things you need to know, the one big thing, the number of the day, the fear and greed index, the deep dive, the chart of the day. You get that every single day. We gave you that on FOMC day. Then before the report, an hour and a half before Jerome Powell came out, we gave you the full cheat sheet, the when the events were happening, what to look out for at each part, what data points are getting you're going to be released, so you know exactly what to do if you're trading these events or if you want more knowledge about these events. I gave you all my charts. Again, it's never financial advice, but it does guide you through the event. Then we gave you the after analysis as well. So after that FOMC day came out, we gave you the after analysis. That was the event cheat sheet. We give you deep dive research. We give you specialized emerging tech written by experts. We've got the XRP crypto weekly report coming out this week. So that's the weekly access you have to that. You can DM me one-on-one, ask all the questions you like. There's also a live community in there. People are in threads now, asking each other questions, commenting on the carry trade, for example. We've got debt planner and budget planner hopefully coming out by the end of this year. We've got the portfolio insights app and the chart training course both coming 2026. Massive perks being added. If you get it now, even if those come out and we have a price increase, you will not be affected by a price increase. So go check it out. You get at least try it for 1 week. I'll give you the link in the live chat. It's the first link in the description as well. Let me get rid of that, but thank you very much for the super chat. There is the link to the newsletter in the live chat. Okay. Let me go back to that newsletter. So yeah, we've got JP Morgan now holding a year's worth of mining production in a vault. They used to be short, essentially long. We've got structural deficits and inventory drain. The industrial floor under silver's price is hardening. Solar voltaics consumed 230. Yeah, remember, this is about silver. There's actual use cases. So companies have to buy silver to produce certain things, such as EVs, solar panels, AI chips. Silver is needed. So solar voltaic consumed 232 million ounces in 2024. That's solar panels we're talking about. Continuing a trend of elastic demand. Manufacturers cannot substitute silver quickly without sacrificing efficiency. The demand coincides with fragile supply chain. The impact is visible in exchange warehouses. COMEX registered inventories. The metal available for immediate delivery plunged from 34 million ounces in January of 2024 to 28 million ounces in November of 2025. So what we've got here is the actual physical silver behind the exchange that can be, remember, they have to hold it and they have to deliver it if needed. They had 34 million ounces in January 24. We're talking about one of the biggest exchanges linked to the CME group. They had 74 million ounces in 2024. They now have only 28 million ounces as of November of 2025. This is a 62% drawdown, suggesting that the buffer between paper contracts and available metals is critically thin. The US Mint recent suspension of silver eagle production also happened, and that's due to a lack of silver blanks. And that further exacerbates retail anxiety, creating a feedback loop of scarcity. And if this starts hitting the mainstream media, and if silver goes up another 10%, 20%, then what you will get is retail panic, and not panic selling. You'll get retail frenzy and buying, and you can have that bubble. That's where we can start seeing $100 silver per ounce. Structural implication, and probably what we'll do, everyone will start saying silver's going to $500, and look at all this short squeezing, and what will probably happen is the bubble will burst and will come dramatically down, like in 2011 or 1980. Was it 1980 with the Hunt Bros? We just go to the chart. That was a crazy story as well. We covered that in previous newsletter. I'm going to touch on it in a second now. Yeah, 1980, when silver went to $50 an ounce, all the way from $1.73, but then it came all the way back down to $4. Anyway, so the anti-hunt squeeze. So market veterans frequently compare today's volatility to the Hunt brothers' infamous attempt to corner the silver market in 1980. This comparison is dangerous because it is inverted. Sophisticated investors must understand why 2025 is fundamentally different. This is an anti-Hunt squeeze. The fragility of 1980, that was the speculative bubble in 1980. The Hunt brothers accumulated approximately 195 million ounces of silver. Their strategy relied entirely on massive paper leverage and debt margin. This created a house of cards. When silver peaked at $48.70 per ounce in January the 18th, 1980, regulators stepped in to change the rules. They introduced Rule 7 to restrict margin buying, cutting off Hunt's liquidity. The result was catastrophic. On Silver Thursday, the price of silver crashed more than 50% in a single session, plummeting from $21 to $10.80. The liquidation was forced because the buyers were leveraged speculators. So there is that element of if you go up too fast, things can change and can come back down. However, that was more of a regulatory shift and also after a massive move up. I don't think we've had that move up to be anticipating a 50% correction in a day. We don't have that sort of volatility or that sort of regulation that can come in place. The fortress of 2025, the current dynamic flips the script. So what I'm actually going to do is I'm going to see if I can bring you this other newsletter that we put out. Let me see if if I press this, will it come over? This is a newsletter we put out on June the 5th when we were talking about silver. So let me just show you some of the key facts here. This is when silver went parabolic because of the Hunt brothers in 1980. It was two oil tycoons tried to corner silver. They pushed it up from less than $10 an ounce to $50 an ounce. Isn't it a very interesting story? I guess I would recommend everyone goes and reads about it. Regulators cracked down, silver collapsed 75%, and the Hunts went bankrupt. We also had another time where silver went parabolic. That was in 2011. Post-crisis fears and inflation bets sent silver soaring to $49 an ounce before CME margin hikes triggered a steep sell-off. That was 2011. In 2021, we had the Reddit short squeezers, the Reddit bros, the Reddit GME squeezers. They came out and they did hashtag silver squeeze. It did have an effect, but not massively. Reddit's Wall Street Silver tried to ignite a squeeze. Silver touched $30. SLV inflow surged, but momentum faded because it was towards the end of that whole COVID hype. So the lesson is price spikes do happen, but sustaining a squeeze needs more than just hype. It's never wrong to take profits. And that's what I want to say today. We brought this out to you at around $30. We are at $64 now. There's nothing wrong with taking profits. Don't always think we have to get a squeeze or the hype will build the squeeze. There needs to be more going on to get a proper short squeeze. The interest is loaded, however. So the futures managed money short contracts are low, 15,000 versus historic highs, but commercial. So the short contracts are low on the retail side, but commercial hedges hold a massive structural short of 70,000 net. That's about 700 million ounces short. So there is still quite a lot of short interest on silver. Even after, I know this report's old, but even after JP Morgan's flip, we've still got a lot of short sellers for silver. SLV is an ETF that's surging to an all-time high. And remember, they actually buy physical silver, so you do have that supply shock as well, even with buying an ETF. Let's look at the supply versus demand, because obviously it all comes down to supply versus demand. In 2024, the supply was for mining about 819 million ounces. From recycling, it was 193 million ounces. But 2024 demand was more than that. The total was 1.16 billion ounces. That's a fourth year in a row with over 100 million ounces of deficit. So the demand is way stronger than the supply. And this year, I expect it to be way more because of all the buying of silver. Industrial was 680 million ounces. That's a record high. So people are saying, well, they're not using it in solar, EV, or electronics anymore. Well, it's continuing to be record high after record high every single year. And investment wise, about 200 million ounces. That's going to go up this year. And industrial's also going to go up in 2025, and already has gone up. So the deficit trend is stockpiles are being drained. We saw that even with the exchanges, 62% down year on year. Vault inventories are thinning, and retail premiums are a warning sign. So what we are starting to see here is potentially the build-up of further short squeezing. Someone asked, do I ever think it will hit $100 an ounce for silver? Yes, I do. I think in 2026 there's a very good chance we hit $100 an ounce for silver. But don't be blind to the fact that we can have sharp drawdowns. If the sentiment changes, regulation changes, we can have silver drop below $50. I do think $50 is pretty much the base now. The base could be $60 now as well in terms of my trades. My stop loss will be around $60. But I think the main base is around $50. We might, if we have a sudden drop off and everyone gets fearful and panic sells, we might wick below $50. But I think $50 is very much the base now. And if the hype continues and we still get this parabolic run, $100 is very possible. If not, we can go down to $50, accumulate, and then steadily continue to go up from there. We have to have a look at the gold to silver ratio. I'm about to end this and go over to Martyn. So I'm going to leave some of this to Martyn to cover. Gold and silver ratio is at a historic high as well. Silver, why do I buy it? Inflation hedge. What would I buy? Physical or ETFs? I do a bit of both. So what I'm going to do is give you a bit more. I'm just checking if we have a link from Martyn. So yeah, there's physical bars. Why would people buy physical bars and coins? Well, you own the real metal, typically in the form of bullion bars or government minted coins. How do you buy it? Well, you go to online dealers, local coin peers, peer-to-peer or local coin shops. Remember, peer-to-peer is more risky, but you get a better price. The best price you can get is actually through ETFs because you don't have to pay for shipping or risk or VAT or stuff like that. The pros are you hold the metal, no counterparty risk. It's private, there's no paper trail, and it's off the grid. Useful in systematic crises or currency failures is a collectible premiums for some coins. Some coins are CGT free. For example, here in the UK, Britannia's, their legal tender, they're CGT free. The cons are the premiums. Physical silver often costs 10 to 30% over spot. Storage, safety concerns, insurance, and space. Liquidity, slower to sell versus digital assets. You have to go out and actually sell it, not just press a button. There's no yield or leverage. Who's this best for? It's best for long-term holders, preppers, those hedging against systematic risk or wanting full control. Silver ETFs such as SLV. What is it? Well, you buy a fund that tracks the price of silver. SLV, iShares, or PSLV, Sprott are the biggest. How do you buy it? Well, you go through your stockbroker, Robinhood, Trading 212, eToro, and in the UK, you can put it inside an ISA, or in the US, you can put it in your Roth IRA. The pros are it's easy to trade, highly liquid, no storage worries, tighter spreads, lower premiums, suitable for short-term trading or chart setups. Cons, you don't actually own the silver directly, you own paper. SLV critics argue the metal isn't fully allocated. Can be impacted by fund manager risk or but not really with these specific ETFs. No access if the market shuts down. Best for traders, passive exposure, and using tax advantage accounts. Physical silver gives you sovereign protection. ETFs offer trading flexibility. Think of ETFs like a surfboard, good for riding short-term waves. Physical is your lifeboat. Don't confuse the two. Okay, I've just realized that we already have Martyn's link. So let me delete that. Let me see if Martyn is live. If Martyn's live, we'll end this and we'll send to Martyn. No, I'll keep that screen open. So, let me answer some of your questions now. There's more research within the newsletter, but in terms of the chart, I'll quickly just show you the chart. The chart is also in the newsletter with all my levels as well. This is the monthly chart. Obviously, some would say we've got a big kind of cup and handle structure. If we are looking at cup and handle, the target is $100. My next target is around $69 and then $75. In that range, I might look to sell, but then mainly $100 or below $100. I'll see how it reacts at between 60 9 and 70, I might start selling there. But then I might start laddering out at 73 and $100. That's personally what I might be doing. Again, I don't give financial advice. Let me look at the live chat. Gold has had a nice run overnight, up 70% on my 50x leverage trade. Goodness gracious, good luck to you. I'm up over 50% on my non-leveraged spot position trade. Over the last year, I'm up 65%. Do you think silver will ever hit $100? Yes, I do. Silver is more conductive than copper. Thank you, Brian. Will the carry trade affect silver very much? Yes, it will. It would send everything will be affected down, down, down. Sorry if that question has already been answered. No, it hasn't been answered. Yeah, the carry trade will affect everything, but please be aware that a carry trade doesn't just 100% mean we're going to drop. Just because if everyone knew that on the 19th of December next week, when the Bank of Japan raises rates, we drop 20%, people would be selling aggressively right now. Yes, there is some mechanics behind it. That means people might not be selling and it'll be algorithm based. But if I expected an 80% crash from the carry trade, I wouldn't be invested in the markets right now. I would be in the bond markets in cash or earning or uninvested cash earning 4.5%, for example. So there's no guarantee that the carry trade will send us down because there's no guarantee that the carry trade will have a dramatic unwind like we've seen before, but you have to be aware of the risk in case that does happen and be aware of the opportunities in case that does happen. Are you bullish or bearish on the market for the rest of the year? There's not really much left for the next of the year. I don't really want to give a short-term prediction. I've given my prediction 4 months ago. I think that we were stalling out. Up, 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 up. Gold had a nice run overnight. Okay, I think we're going to end the show now. Will the carry trade affect silver very much? Yes. That's the end of that video. There's going to be 2 links up to watch over here and over here. Do check out those 2 links. But until next time, take care of yourselves and each other. That's going to come out as its own video. And what we're going to do now is actually end the show. Let me see. Yeah, we'll send everyone over to Martyn now. Is there any other questions? Did we ever figure out which chart Eli B wanted to look at? Did that ever get sorted out? I don't think we ever sorted that one out. Okay, Martyn is live now. There is a link. Thank you for tuning in. Martyn will be covering the story as well. I'm sure he'll be covering the cannabis sector as well. Until next time, take care of yourselves and each other. I will see you hopefully on Sunday. I'm getting very unwell, so I'll see what will happen. But if I'm feeling well, then we'll be back Sunday with the Sunday show and the Electrum event. If not, I will see you back on Monday. But until next time, take care of yourselves. Go over to Martyn. He's live right now. Bye-bye.